Hello, this is Roland. Will be with you with the market recap, or you want just like short market update at the middle of the week. Today's Wednesday, October 15. You're gonna check what's going on in the market while the market government shutdown still continues in the United States and the concerns slightly increasing. And we have to wait now and see that what's going on here. Both parties they blame each other that that's your fault, that's your fault, whatever is going on here. But what's important that the Republican you're using this condition and the situation to make the government smaller as what they were looking for in Doge. So it's not something so bad for them as well. Anyway, this is the market. Nothing is clear. Still there is a more than 95% chance for rates cutting at the end of this month. I do think that can be the wrong decision if the Federal Reserve cut the rates by the condition that we have right now in the market. If the rate cut can increase the chance of increasing the inflation and put the Federal Reserve in a more harder and tough condition for December meeting. And if they cut the rates in October, probably they will be forced to rates to increase the rates in December. That's not going to be the good decision. I don't think that should be the risky decision. Anyway, the inflation numbers that we didn't have the NFP numbers so far, and we are not probably going to have it this month. And inflation numbers, probably not probably they already announced that it's going to be published at October 24th, which is supposed to be published today. It's postponed to October 24th, and we have to see what's going on there. The reviews are not too much brilliant. The inflation should be more constant. That's the reason that I'm thinking the Federal Reserve shouldn't cut the rates. Anyway, while this the concerns going on continues there, on the other hand, in the stock markets we had amazing earnings reports. And that these reports supported I mean, they helped the markets, and they stopped the bears somehow. The bears which started on Friday, I will talk about this. And finally, they could slow down the bears and bring the bulls back to the charts. Earnings mostly from the banks, they were amazing. They supported all of them. They could beat the markets. EPS, revenues, all of them from especially the banks that they published so far, but still we had other brands, companies, same as Louis Vuitton, the Jason and Jason also, which they published their earnings, but mostly the banks, they were amazing and they were the star of the week. So what's generally going on here? I can say that with the tensions that they have been is going on between the United States and China. Yeah, these tensions somehow slowed down after Mr. Trump's reposting about we shouldn't be worried about that. They're going to solve it, and some posts and some somehow the messages around about this, but still the market is concerned. Market concern is markets worry about that, and the market concerns over the trade tensions didn't slow down. So still, we think that I don't think that they even thought with the great earnings, if the market could recover some of the Friday's loss, still we shouldn't be so happy about that. And especially maybe this week and next week, which we are going to during the days that we're going to have the banks and then the tech companies reports, maybe we can have some positive reaction in the stock markets and generally in the markets. But what next? If the Federal Reserve cut the rates on at the end of the month, yes, this option can continue. But if they don't cut the rates, then we shouldn't be too much positive about that. I even thought if they cut the rates by another 25 basis point, maybe they can support the market, but it can increase the concerns over the inflation and to bring the trust of the clients and the consumers and investors is so hard. Yes, even today, later we're going to see that, but small business index fell to 98.8 from 100.8. That shows that the market confidence and the market consumer confidence, even the CB consumer confidence last week published, it fell to 94. All these data, 94 or 92, something like that. All these data shows that the consumers, they are not so happy, even if the central bank they cut the rates. So far this week, we didn't have too much data, mostly from the China. The most important data we had from the China, it was amazing to see that the trade data showed that the export and import increased by 8.3 and 7.4% respectively, showing that the Chinese economy finally giving some positive sign. Continuing these positive data today, we had inflation numbers from China, where we saw that the inflation slightly recovered after several months of the negative inflation, deflation. We saw that the positive, the 0.1% growth, even thought it was less than 0.2% expected, but still the growing inflation is something good. On the PPI also, we saw that after several months of the high falling by 3%, 2.9, 2.8%, now that fall by 2.3%. That's generally can be the good and positive and a good news. Continuing in China, we had in the loan numbers. We saw that according to the data published, we can see that the loans are increasing. The number of the loans increasing in the markets, they're giving them more loans, and that can support the market somehow. You know what I mean? Just like when the businesses are so happy about that there is opportunity of the developing, of the opportunity of progressing, so I can get the loan and I can increase my business. I can develop my business and work more, invest more on the business. That can be the good news for the Chinese economy. But looking at the other economies, industrial production in the Eurozone fell by 1.2%. That according to the data we had so far. Generally, from other European economies, the German and Spain, they were in countries that they had somehow the good news somehow this week so far, with the split of the inflation in the Germany increasing to 2.4%. Why I'm telling that it's a good news, because when you see the inflation is slightly increasing, especially you know that the lower inflation is mostly because of the lower demand, not better economic policies. And then again, you see that the inflation is increasing. It means that, okay, the consumers finally started to spend the money and the demand is increasing. That's why that can be the good sign for the Germany, for the Spain as well. We had the Spain inflation around 3% so far. And that can say that, okay, the market and the consumers are doing fine. But on some other countries, the European countries, such as the French, inflation fell by 1% monthly and increased only 1.2% annually. That can increase the sign of the increase the warning sign, and increase the warnings that the European economy is still under pressure. Other economy that so far this week we should watch more closely is the British economy, where the unemployment rate increased to 4.8%, and why we take slightly more than expected. And average earnings increased by 5%, more than expected. And this is while the retail sales increased only 2% annually in September, showing that the market doesn't spend too much money, too much investments is coming to the market. That shows that the British economy also should be still under focuses, and we should watch that more carefully. The other economies such as Korea, such as Japan, also, especially the Korea, Australia, New Zealand, they had a better, same as the China that these economies also had a better export and import data, showing that finally after several months of lowering the export and imports, now there's some progress in these that probably we can getting closer to the New Year. We can see probably a little bit more positive data from China, China and especially South Korea. Especially these two economies. Yeah, that was what happened in the economic calendar and the earnings. Let's go and see what's going on in the charts. With the ongoing geopolitical tensions here in the market, we can see that the market, the VIX is still high after increasing above 22 points, above 22 generally. We can see that it slightly is now. It's at 19.65, but still the 19.65 is not a low number. You know, just like compared with the 15 normal number, the 1965 or almost 20. It shows that the market risk is so high, and as long as we have a risky market, we have a more demand for the safe havens such as the gold and the silver. Just looking at this number, we can see that the dollar index also is the positive in a bigger picture. Yeah, after yesterday's Mr. Powell's comment, dollar slightly eased, but still it's above 98.60, almost 98.57. That's positive data for the dollar index. So still the positive picture is positive. In a bigger picture, we are positive about the dollar index, while the gold also is increasing. The gold printed again the new all-time high, about $4,200 earlier today. These economic concerns, increasing the concerns about the energy prices, putting the pressure on the oil prices. However, on the other hand, looking at the data in the market, we can see that especially with the OPEC Plus decision of increasing only 135,000 barrels instead of 250,000 barrels, recovering the cut of the 2020. These data shows that okay, with this condition, the market, the producers also trying to stabilize the market. Now we don't expect too much lower data, but still we are not positive about the energy and especially about the oil market. The gas a little bit is a different story, but about the oil we are not too much positive, especially as long as it's trading under $62 for WTI. On the stock market, S&P 500, Nasdaq, and Dow Jones, all of them with the positive earnings report, they could recover the Friday loss. Now they are positive, but how much this positive can continue, that's another question. That's another question that we should think about that. But for now, what we can say here that now the market should think should think twice before making any new progress or any new taking any new step. As we can see here, that there are too many other options that they can increase the risk in the market. Maybe the earnings they can support the market in the short term, but the other data they are not too much positive and supportive for the stock market. But anyway, technically we can see that the market is increasing. However, if you are going to the daily chart of for example the Nasdaq, you can see that with the all-time highs that we have in the crypto stock markets, we can see that the Dow Jones is supporting anyway. Sorry, we can see that the OBV supporting the Nasdaq anyway, the uptrends. The same thing we can see in a S&P 500 chart, and also we can see in daily chart of Dow Jones. Okay, this is a daily chart of the Dow Jones. All of them, they show that in the Dow Jones a little bit different thought. In the Dow Jones a little bit different. The uptrend is supporting by the higher buy positions, but in the Nasdaq, Dow Jones, and in the Nasdaq and S&P 500 is not supporting. Anyway, in the cryptocurrency market, if we look at that, you can see that the Bitcoin trading on a 112,000. We talked about that in the previous days. The market is not especially positive as after falling lower, touching 126,000. We talked about the 118,000 and the holding the 118, 113, 11, and then 109. Now we can say that under 111,000, 113,000, we can say the next target can be 109,000. There is no positive sign for the cryptocurrency market, at least for the short term. Looking at the bigger picture, in the bigger picture, we have still we have some hopes that all these options could be somehow the correction, especially as long as it's above 102,000. But generally, the market still doesn't have the positive shape. Yeah, this is the market condition, was generally what happened in the market and what's going on. If you had any other question, don't forget to write in the comment section or try to get back to you as soon as I can. Have a good time. Bye-bye.